No more Mr. Nice Guy. No more Mr. Clean. Alice Cooper market is what we're in here, folks. Mr. Trump, Mr. President Donald Trump is serious here. Time for no more Mr. Nice Guys. We are in the heart of the earnings season. We did get big reports last night from Seagate, Bloom Energy, Starbucks, a couple of the winners, Robinhood, Teradyne, a couple of the losers. We got SoFi this morning, a few people in the chat talking about that, of course. We got Avis Budget, we got Generac, we got Etsy. Tonight is the earnings session after hours. We get Meta, we get Microsoft, we get Google, we get Amazon. I'll throw in Qualcomm there just for giggles and grins too. Couple of notable analyst ratings after the earnings. Celestica upgraded, bit of a contrarian call there. Maybe Spotify upgraded, T-Mobile upgraded. Our guest today, folks, at 8:35 a.m., a new guest, Nancy Tangler from Laffer Tengler Investments. We'll see what Nancy has been up to, and we'll get some of her high-level calls here. Folks, it's Wednesday. Joel's back tomorrow. We can rejoice. Let's get on with pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the up to right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Wow, that's a volatile puppy. Folks, these charts are brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. It actually wasn't very volatile session. There is a lot of chop there. Looking at the SPY trading about unchanged, maybe a couple pennies higher. But I did want to reference a little surprise that we got for you later. It's not Joel, but it is an image of Joel. Let me pull up the USO here. Let's just go to it. Let's just go to it, folks. What do you got there, Triple D?
I was missing him. So I had to get Joel back.
It's a volatile puppy.
Right there. There he is. So we need him here because the markets were weak yesterday. So I figured if I wore this shirt today, it would be like Joel was back. And then, you know, maybe the markets will pop right back up to all-time highs. So
I like
anyway, continue.
Okay. We'll go USO next here, trading up 3.5%. I don't know if we're that surprised about that, considering the response overnight from President Trump. We have gold trading down about 0.5%. Let's do SLV here just real quick. Right around there, too, down about 0.75%. The last one we usually do, Bitcoin trading up about 1.5%. And one more here. Why not? I'll throw in the TLT for good measure. We haven't looked at the TLT in quite some time. Down 0.2%. Well, Triple D, how is your morning getting kicked off besides you had to listen to me sing Alice Cooper?
I like your singing. It was good. Obviously, Trump is out there posting stuff again here. Like, what does this mean? 3 hours ago, dropping the old Alice Cooper, Trump with a machine gun. I don't know. Can you put the image back up there? Let's just analyze it
just for a sec.
Oh, he lost it.
I got to find it. Hold on. Yeah. Where did it go? Trump. I'll just pop it back over here. Give me 1 sec.
So slight escalation. That's an escalatory tweet if I've ever seen one before. USO ripping higher here. Probably didn't help the escalatory tweet, but we know the market is completely disconnected with the USO. So let's just talk about this for 1 second here. As USO is making a new 52-week high. The market doesn't care about higher oil prices. I don't know when it will start. Maybe it's going to be when some companies start warning about higher oil prices, but this is like a huge disconnect. Like the market is disconnected. It's a red flag, but we know this market has climbed millions of walls of worry before, and this market is being driven by AI, which is going to bring us into, we're probably going to fly right into it, to be honest with you, is the earnings season. Because we have the AI stocks rip roaring and rallying overnight here, thanks to Seagate. I'm going to start with STX and go right into it. thanks to Seagate. The stock is up 100 points here this morning. Brentster, these companies are just blowing it away. These chips, man.
Yeah.
What's the story, Morning Glory?
So pulling up the Seagate chart on screen right now, you can see a nice pop over 600, almost to 700. I'll get you the results here just a sec. Off the top of my head, without looking at them directly, I'll have them here in just a sec. The results were really strong. They reported 410 in earnings. Analysts were expecting under 350. They reported 3.1 billion in sales. Analysts were expecting about 2.9 billion in sales. The guidance is where it's really at, though. They're expecting 480 to 520 for next quarter. That's Q4. Analysts are under $4. And then for the sales guidance, they beat by like a couple, or that if they report what they're guiding here, they're going to beat the analyst expectation by like a couple $100 million. They're expecting 3.35 to 3.55 billion in quarterly sales. Analysts are around 3.15 billion for Seagate. Last night in that stand room when we were reporting on this, Dennis, I was like, this is a blowout. Straight up, this is a blowout right away.
Straight up blowout. And we probably set the bar a little bit lower even for them because they were down yesterday. Rambus had reported, Celestica had reported, some other AI stocks. Overall market was weak yesterday. Micron, SanDisk were all weak yesterday as well. So you kind of had a little bit of an easier, like that bar just set a little bit lower there just because of yesterday's move in Seagate. At one point in time, it was down $40. So now you get the re-rating much higher. We've seen this happen with Micron and SanDisk in the past. Sometimes they leak the gains away, but it seems like eventually they do start to catch a bid here again. I've stayed long Micron on my swing trade here. It was a little tough holding through it yesterday. It is right back up here this morning, though. These stocks just continue to climb. Also reporting last night, not to be outdone here, NXPI had a pretty darn good quarter here as well, Mr. Brentster. If you can give us that report, this stock, we give Seagate all the love, up 17%, while NXPI is up
19%.
Chips and more chips. Do you want some dip with your chips? There isn't a lot of dip with these chips.
You got me on that one, Dennis. NXPI reporting 305. Analysts were looking for about 295. Sales coming in pretty much in line, kind of like the bottom line. 3.18 billion. Analysts were looking for about 3.16 billion. Their guidance, they are looking for some really solid next quarter guidance. Q2 earnings expected 329 to 372. Analysts are down around 317, and the sales guidance also similarly strong. Do you have any thoughts on this chart?
No, the same thoughts. You've got the tail of hardware and the tail of chips that are just driving this market, and this is the driver, and this is why the S&P can digest an oil price that's approaching 52-week highs. It's it's the chips. I mean, an NXPI, we can just do some quick technicals on there for Joel. I know he's not here, but I'll try my best. You're looking here at the charts and going out, you got to go out to NXPI. You got to go to way back 2024. We can find a 296 high if we go back there, but we're not far from all-time highs here too. Peer plays, there's a lot of them. Texas Instruments on semiconductor. ON is another one there. ST Micro is another one there. So you get these these good earnings here from NXPI. Immediately pops up all those stocks too. So you just got, chips just flying all over the place here this morning. But, this is what the market is. It's rotation. And, you obviously have USO higher, so that's going to impact some stocks too. So S&Ps aren't really up as much as you'd think they'd be. But then you also have Teradyne, which we might as well cover all three because, you get the two good reports, and then Teradyne, similar industry, obviously here, reports last night. And the bar may be too high here for this one. How did Teradyne do?
They did pretty good. So, yeah, that's why I think we're maybe leaning on a bar, the story of a bar too high here. Teradyne reporting 256. Analysts were expecting for about 210. So that's a solid beat. Sales 1.28 billion. Analysts were expecting about 1.2 billion. Another solid beat. Guidance was in line to strong. They're expecting Q2 earnings $1.86 to $2.15. Analysts are around $1.96. Shares here this morning, trading down about 10%.
Start of the year, $200. Closed, yesterday, well, it didn't close, but close to 400. Stocks up 100% this year. And we are seeing other ones go. Other ones have continued too. But giving a perspective, NXPI was barely up this year. So bar not super high.
Sure.
Seagate, different story. It was up a lot too going in here, but this is just such a blowout quarter here. You know, when you have a bar really high, you got to really blow it away. Seagate absolutely did. And the earnings were fine here from Teradyne, but you know, the bar too high. Also, with STX just blowing it away an hour earlier because Teradyne didn't report till 5 o'clock.
Yeah.
That's, you know, like an immediate bar that they just raised for Teradyne. So you always want, like, you got a good report, you want to get it out there first. It's why we talked about Goldman Sachs, you know, in this earnings season, moving themselves up to first because Goldman Sachs always like third, fourth, fifth of the big majors, and they blow it away, and then the market doesn't give them any love. So Goldman Sachs moves them up, gets them up to the first one to report, blows it away, and the stock goes down anyway. So it didn't work in the Goldman Sachs case, but obviously the dip got bought, which we called on that show that day. I mean, you just look here, though. This market is just, you know, hungry for chips, continues to move. I don't see that changing. So I do think, you know, if you get any dip on any of these, I think those dips probably get bought. Does Teradyne dip get bought here? Probably. I mean, it's just, you got money managers that, you know, are looking at oil and saying, crap, you know, here's oil. And you can sit here and worry about it all you want. What they're worried about now is their jobs, because everybody's been sitting in cash expecting a huge recession from the higher elevated oil prices. Maybe that still happens, is getting punished with the stock market making new all-time highs. So I think that's where we are, is chips just driving the bus. But not only chips, Spencer, energy, which we have talked about. And if you've been listening to this show for the last 4 months here in all of 2026, we've been saying two things: hardware, energy, hardware, energy, hardware, energy. Energy. Bloom Energy. Says Bloom Energy. Energy, right?
Says it in the name.
BE. This is the one. This is the one, BE. The stock has been unbelievable. Started the year at $100, 226. Bar was super high, but they just blow it away. Give us the numbers, BE.
Maybe the strongest report of last night. They reported 44 cents. Analysts were looking for around a dime. They beat by almost 30 cents on a 44-cent bottom line. Sales beating by $200 million. As far as I can tell, maybe the analyst consensus was screwed up here, but they beat the sales figure by $200 million, 750 mil. Analysts were around 550 mil. They raised guidance substantially. Emphasis on that word, substantially. Their prior guidance was 133 to 148. They went all the way up to 185 to 225. Left the analysts hanging out under the 140 level. Bloom Energy shares this morning trading up almost 20%.
The energy, you know, trade is for real. And, you know, we can just see where this market is going. You know, as AI continues to expand, you're going to need more energy here. Bloom Energy is one of the plays here off of this. Obviously, multiples and valuations are scary, you know, and I'm playing it through some lower multiple plays, but the ones with the high multiples go the most. And, you know, you see this in this market here, and the stock has been unbelievable. Credit to a lot of people who have been calling the stock out. I know Chris Camillo at Dumb Money has been, but there's been a lot of people who have been reaching out to me and talking about this stock as well for a while here. So credit where credit is due. This has been an unbelievable stock in the last year, going from about $35, $226, and now $266 now in the pre-market session. Crazy moves, hardware, energy, that's what this market wants. Continuing on that theme, I want to just take it to Generac this morning because we're just kind of theming all this right now.
Yeah, I like how you're theming this.
I've been saying GNRC is, you know, a data center play. You got to have generators for all this power you're generating, obviously, and you're trying. GNRC is right there with that. GNRC this morning popping up nicely as well. Full disclosure, I'm long GNRC.
Shares trading up about $40 here this morning. Company reporting $1.80. Analysts were around $1.33. Sales coming in line at about 1.06 billion. Let me just double check here if they had any guidance. I don't remember if they give guidance always. They do give a little guidance. They are raising their adjusted EBITDA margin, not a metric we normally look at, but I'll mention it here because Generac raising. Adjusting their EBITDA margin guidance from 18 to 19%, up about 50 basis points to 18.5 to 19.5%. Well, that's not bad news that they're raising their adjusted EBITDA margin. Zoom out on this one a little bit, Dennis. You kind of just touched on it there for a sec, but I mean, what is your give us a little bit more of the thesis here longer term for Generac.
Lots of reasons here. Obviously, you just think, oh, they just sell generators and homes. I have one in my home, and you think about that. But this is the whole AI data center play. So, and we can ask, if you can't, articulate it in your own words, in like 5 seconds, you can bring it up in Gemini. So, Generac has emerged as a significant, coming from Gemini, significant AI play by pivoting its focus towards providing critical power infrastructure for AI data centers. So that's what we were saying, data center play. Why?
Yeah.
4 points they make: infrastructure provider. Generac positioning itself as a primary winner in the massive data center build out, targeting hyperscalers, backlog expansion, and integrated solutions. So they're right here in the mix on everything in the data center play here. And it's been quiet. Like, it's a stock that really hasn't gotten that love here. So if the market starts thinking about it more as a data center play, the stock price could re-rate higher because the valuation is not crazy. Like, what were the projected earnings? Did they give the full year, or they didn't give guidance?
I don't think they gave like an earnings figure. No.
Yeah. What did they make in the quarter?
They made almost $2.
They make almost $2 in the quarter. So you think
For their
about
first
that.
quarter.
If you take it like,
Yeah.
say they make $8, you can quickly do some math there too, or you can, go farther than that and say round it to 10 for fun. I mean, $8, the thing's trading 25 times forward earnings. It's not crazy expensive here. You got Bloom Energy, on the contrary, trading almost 100 times earnings. So, obviously those earnings are going up substantially here, but this is, just showing you like the cheaper way. Now, it's maybe not as good, like of a direct play as Bloom is, but still an AI center play here. So I'm going to stay long this thing. I just think I'm staying along the two themes of my long-term portfolio: hardware, energy, hardware, energy, hardware, energy. So hardware has been the best, though. If you're in the chips and you're in, obviously, a lot of these other stocks, you've been killing it. And what am I staying away from? I'm going to continue to stay away from software. Not that Robinhood is software, but it is. Not that Robinhood is.
It's not definitely not hardware.
It's definitely not hardware. And I do actually have a little bit of this, which is I should have probably sold it on the bounce. I've just kind of been in it for a long time here. Not really a long time, actually. I just felt it got down too far. So I shouldn't say I'm completely out of software. I still am, but I've been I got rid of my IBM. I've got rid of a lot of my Oracle position. I've just been selling into strength here. Probably should have been done. The prudent investor would have been selling into the 90s on the Robinhood. I guess I wasn't prudent on this one because it's like, I'll hold on for a little bit here. I was nervous about this report. I talked about the STN think tank, and I was like, I'm just going to hold through it. And that was a mistake. So stock, Robinhood, give us the earnings. They were not great.
Well, real quick, Dennis, is software so a case in point here with Robinhood? Is this more of a speculator's tool, or is this more of a software play?
Both.
Both?
And
okay.
Speculation came out of this market in the first quarter. It's come back in the second quarter, but we're not talking about the second quarter. We're talking about the first quarter here right now. I'm sure I didn't look in deep into the numbers here, but I know Vlad's, I think, going to be on CNBC here this morning, I think they said. But I mean, down 11% here. Obviously, the numbers weren't good. I mean, a lot of times, we can look at the numbers and say and analyze them in all our own ways here. But the market, it's about the reaction to the earnings more so than the earnings. So, I mean, the reaction is not good here whatsoever. So, just give us the details here, Brent, on the hood, if you don't mind.
They reported 38 cents. Analysts were looking for 46 cents. That's a miss. They reported sales of 1.07 billion. Analysts were looking for almost 1.2 billion. That's a miss. And they also, let me see if I can dig anything out of the report here real quick. There was a comment from Vlad. I want to find it here. Give me a sec while I do this in the background. They did give some guidance. They say they are expecting investing an additional $100 million to build and support the user interface for Trump accounts, which was not included in our prior outlook. So because they are investing $100 million more, they are revising their prior outlook to account for that. So they do have a higher OpEx number. Adjusted operating expenses now expected to be nearly $3 billion. I mean, I didn't know this until I just read this now, but the market's been hitting stuff that has had kind of like CapEx.
I heard CNBC trying to say that.
No, you don't think so?
Down here too. I don't buy it. It's $100 million bucks. I mean, we're talking billions of dollars here.
Cool.
So I think
glad you said something.
I don't think it's as big as the media is trying to let you think it is.
Love it.
I think it's just a matter of valuation contraction, multiple contraction. At one point in time, it's trading 70, 80 times earnings, has no business doing that at all. Down here in the 30s, it's reasonably valued. Do I think it could bounce? I think it could, but man, it's not getting any bounce at all here in the pre-market though. So it just continues to leak here. I'm not going to be a hero here and add to my position. And I'm, having no seller's remorse on, I wish I would have sold this thing. I wish I would have went back, but hindsight capital is always 2020. So it's one that I had a half-size position on. And I just I'll just ride through it. And, they shouldn't have did that, especially when I was nervous about it. So, but investing and trading, just 2-minute rant here, it's hard to separate those two things. I've got a long-term retirement account that I buy good companies at reasonable valuations. And then, I've got my trading account that I'm actively trading all the time. What I post every month is my results from my trading account. My long-term investing account is boring. It just kind of moves along with the overall market. I think I have 45 stocks in there, and I've tried to theme it up here a little bit there. But overall, when you have that many stocks, you kind of just move with the S&Ps. S&Ps go up, my long-term retirement account goes up. S&Ps goes down, my long-term retirement account goes down. Because I don't short stocks in there. I only go net long. I do all my trading in my trading account. And that's where I'm actively long short, trading market neutral. It's why I'm consistent, because, I'm not directionally betting a lot of times. I'm a lot of times just taking advantage of small micro inefficiencies, and obviously trading headlines and, you do make small directional bets on individual stocks, but not directional bets on the overall market, at least not for the most part, except, during little periods of maybe Trump tweets. But, that's the separation that I struggled with, my entire trading career, is how do you just hold on to companies and, not sell? I mean, Joel luckily has Lisa, who just never sells. So they buy stocks, and they have stocks from 30 years ago. Well, anything you had from 30 years ago, if they were good companies, reasonable valuations, are up, 10-fold, 20-fold, and that's how you get these huge winners. So separating that, man, is a really hard thing to do as a trader.
I want to just mention that's kind of the highlights that we sort of wanted to give for yesterday's earnings. I'll just mention a couple other that reported here. We don't have to go into them, but Visa also reported, Starbucks also reported, Booking also reported, and Enphase in the solar space also reported. You want to go? We did Generac for this morning. You want to keep going on the this morning earnings, or you want to pause that?
Yeah, we can do Lemonade. I mean, there's two SoFi and Lemonade are retail darlings. A lot of people like these stocks. Have traded pretty significantly here too. I haven't had time to dig into any of these reports. I've seen the reactions, but to dig into them all is tricky. So let's dig into them right now. What did Lemonade say?
All right, Lemonade chart, by the way, coming up on screen here right now. Shares trading up about $5 or so. They are reporting losses still. That's okay. They reported a better than expected loss, 47 cents per share. Analysts were looking for a 58-cent per share loss. That's better than expected. Sales were also better than expected. They giving a little Q2 guidance that was in line, and they raised their 2026 guidance. They raised it from about 1.19 billion to about 1.2 billion. Analysts at about 1.195 billion. LMND. This is one that I think you've traded successfully before, correct?
I trade it lots. I was actually trading it ahead of the report last night as well. Yeah, it's a fun one to trade. It's fairly liquid, gets you, some, liquidity even after hours or pre-market there. And it's a retail darling, so it's got enough liquidity to get in and out of here. The technicals look okay on this. I don't know if it's a stock for me. Again, I'm kind of like a hardware energy guy. This kind of doesn't fall into any of column A or any of column B. It kind of almost falls into column C. Lemonade, this is software. So I'm like, I don't know.
This is definitely software.
Yeah. And again, even my Fastly pitch from yesterday, we started breaking it down in the think tank a little bit more there. And what the problem with it? It is software as well.
It's software.
It is.
Can't get away from it.
Where they are, that, they're trying to make the internet faster. But then I'm like, I pitch it. I was like, I'm talking it, and we talked it through in the STN think tank. Barat was bringing it up. How Anthropic had come out with something, and obviously fell 10% on that. So, I mean, that's something to think about there too. So, I mean, I just think it just seems like the theme again and again. If you're like holding on to software names for too long here, you're losing money. So I'm not coming in and buying a Lemonade or SoFi for that matter here, because SoFi, unfortunately, is software as well. And it reported earnings here too. It's going the other way, down 8.77%. The retail darling of retail darlings. There may be no retail stock loved more than SoFi. Like, there are so many people on social media that believe this is going to $100, $200, $500 a share. I'm not joking. You just see SoFi there as just lovers of this stock. This has been a place in the last year where money has gone to die. We were up at $37 here. No, sorry, I'm wrong. $32 here about 6 months ago. It's 16. It's been cut in half. It's down 50%. Unfortunately, for all those lovers of SoFi out there, this is software too. So this has been caught up in the software apocalypse. Does SoFi have a turnaround story here eventually? Maybe, but it's harder. You're not like, give me the software names that are breaking out to new highs. Please, chat, go find one, two. I'm sure they're out there. I'm sure you guys can dig really hard here because they got to have really hell of a businesses there if they're software and breaking out to new highs. So, I mean, it's just simpler. It's being long, the themes are working overall. Like you got the software going down, the hardware going up. So it's like, okay, well, find the software stocks that are going up. Why even bother? Why not just stick with the hardware that is going up? So, I mean, when you're coming in here SoFi and saying, yeah, it just went from 15 to 20, now we're going back to 30. Well, we're probably not, because you know what? This is not column A or column B. This is column C, the column that I'm staying away from.
Let me give you the numbers, and then this is kind of one of the few names that I kind of really dug into the report a little bit. So many people in the chat were talking about it and giving their thoughts, and certainly appreciate all those thoughts, chat. The company, SoFi, reporting inline earnings of 12 cents, sales coming in over $1 billion, about 1.09 billion. Analysts were at 1.05 billion. So an inline bottom line, a bit of a beat on the top line. They are expecting their 2026 earnings to be around or more than 60 cents. That's right where analysts are. Something that I want to focus attention on here for just a sec. There is, I saw on social media that some people were talking about the technology, SoFi's technology platform. And maybe this is a reason why they are hating this report. But keep in mind, the technology platform, yes, they had accounts down over 16% year over year, but this is like a pretty small portion of SoFi's total sales, under $100 million, and their total sales for that segment, and their total sales are over $1 billion. So I don't quite think that's it. Little perspective here, though. Keep this in mind. These companies, these software companies, they have to like really dive into AI. We had Adobe issuing 5-6 press releases, all very focused on AI, and Wall Street didn't even care about that. This management team was trying to do whatever they could to pretend like they're using SoFi, or maybe they actually are using AI. SoFi, in their earnings press release, they didn't mention the phrase AI for 800 words. So not like these software companies have been rewarded for showing their focus on AI anyway, but SoFi didn't do that in any way. So that was kind of one thing that I picked up from this release. But I think, bottom line, it's just a retail darling, and, maybe the bar was high for SoFi.
I think it's just, again, I want to go through this exercise here because I just asked the chat to come up with the software stocks. It's making a new 52-week high. I can't think of one. Multiple people in the chat couldn't think of one. So let's just go through the IGV here just for a second. You can bring it on the screen if you want, but I don't think so. Just as I bring up the stocks, let's just look at the charts. So bring them up like for the last, 6 months. You got to start with Microsoft. It's 8.94%. We know that's come back. Best of breed for sure, but still significantly off its 52-week high. I mean, we're talking about $550. It's $429, so that doesn't work. Palantir has not been good here this year. It's had an ugly year, and the same story, same downtrend going on here. Oracle, we know the Oracle story has just been awful. Salesforce, we know the Salesforce story. This is number 4. Salesforce story has just been awful. Cybersecurity is trying to come back. PANW, CrowdStrike are both right up there. They've tried to come back. They're not quite there, but they're trying. So, I mean, it's going to be so much more need for cybersecurity in the future. So maybe the pie is just going to get so much bigger that there's a place for everyone, even if there is AI disruption here. But still, not a 52-week high, so it does not work. App11's been a disaster. Intuit has been an epic disaster. We're going just through the components in order. It's 4.76%.
Okay.
Adobe, which is number 7, epic disaster. ServiceNow, we know Bill McDermott's done everything to try to get a stock to re-rate higher. Epic disaster. SNPS, Synopsys, That's off the highs. Here's CDNS, Cadence Design, has been coming back recently, trying to get back, but not at a new 52-week high. And we're talking about stock market that's at all-time highs. So, I mean, there's a clear thing happening here. Autodesk, nope, that one's no good. Fortinet, kind of looking a little bit better on the charts, but still way off the highs. Electronic Arts is at the 52-week high. I got taken over. So, I mean, that's why it's up there, the 52-week high.
count.
I've been arguing for trades to be short on spikes on this thing, because if that deal ever fell apart, this thing falls $70. It's $6 upside, like $50, $60, $70 a downside. But it's not probably going to fall apart. So that's why it's some time value of money here. Datadog, DDOG, not at a 52-week high. Roper Technologies, nope, that one's ugly as well. Take-Two's come back a bit, but still pretty ugly there. Strategy, which is MSTR, just disaster. I'm not going to go through the other like 200 stocks that are in there, because we just went through the top 20 and not one of them
couldn't find one
is close to 52-week highs. So if you're trying to find the software name and saying like, yeah, this is where I want to be, I mean, the market is just making it impossible for you. So until some sentiment turns, until actually, you start seeing this market come into these names, it's hard to get all bulled up here on anything that is software. And I think SoFi, not that it's like not in the IGV, or maybe it is if we go to dig down deeper, I'm not sure, but it's definitely not hardware. That's where the rant went.
That was awesome.
8:30
for sure.
March durable goods are up 0.8% versus 0.5% estimates. We are leaking on the S&P here a little bit here too. I don't know how long the market can take oil and USO breaking out to new 52-week highs. At a certain point in time, we're going to reconnect. You can't have USO going 150, 160, 170. The spies are going to start falling. So, I mean, it's been resilient, but I mean, if oil continues to climb here, if the president continues to tweet out no more Mr. Nice Guy stuff, which is clearly escalatory, I don't know how you get more escalatory than that. If you looked under the definition of escalatory in the whatever, the dictionaries anymore of your AI, it's got to have that picture right there. This is like Trump, no more Mr. Nice Guy. I can't believe the S&Ps are this resilient. I honestly am shocked that they're this resilient, and it makes me hesitant to buy anything right now.
It's probably like looking at the spike in oil. Thanks to the chat for a heads up on this one. Looking at the spike in oil, it's probably something oil related news. I don't have it yet though. I'm standing by. We'll let you know if we do.
Well, oil's been up all morning. So
yeah, but
I wouldn't even say
I get it, but it's like a spike. And look at the volume.
It is a little bit.
Look at the volume. Yeah. We are going to have our guests here, Nancy Tangler, in a few minutes. Zoe gave us a heads up that she was running a little late, which is all good. You want to take a look at, or you want to do one more, Dennis? You can say no, but I pulled up the Avis chart for a sec.
Of course I want to talk
Okay.
Holy cow. When bubbles burst, when speculation comes out of this market, it comes out hard. And this stock was maybe the most speculative of them all. The short squeeze of the I wouldn't say of the decade because we have GameStop, but GameStop part 2, it went crazy from $90 to $800 basically in a week. And now the short squeeze appears to be officially over here, as obviously this market, obviously the stock is down another 17%. It reports earnings, didn't blow it away. I mean, there's just not even any rallies here. I've been saying to the chat, when this gets down to $95, I'm going to take a shot on it because that's where it came from originally here. But even insider sell last night. The firm, which I get confused on, we did say this in the STN think tank last night. And I'm like, this isn't good because this is the firm that was involved in the short squeeze and they're selling shares. So you were pointing out that maybe it's just options involved with that. But regardless here, stock's down 17% today. So we got earnings and we have one of those insiders selling.
And don't let an earnings report be the thing to remind you that your company that you've invested or traded and still own lost $8 per share in cash, and that was a large improvement, about a $6 improvement from the $14 per share loss that they reported in the same quarter last year. This was a worse than expected loss. Even analysts were looking for around $750. Their sales did beat, though, about $2.5 billion. Analysts were around $2.4 billion. The insider transactions that Triple D was referring to there were last night around 5:05. There was a few filings. As far as I could tell, I'm looking at one of the filings right now. There was a bunch of sales, but these were related to call option obligation to sell. So I'm assuming they wrote some calls and they ended up having to sell them, and that's why we got those sales last night. So maybe the stock moved on it last night. Maybe it was an algo move. Until I learn more about this, I would maybe kind of ignore these insider transactions, but I'm super glad he said something to mention it this morning, Triple D.
Like, people want to buy the dip on this thing, and maybe it's going to work at a certain point in time. But if you've been trying to buy the dip in the last week, you've been just murdered. So the first day, I always call these like the violent key reversal. It's one of the most violent key reversals I've ever seen in my life. And we're talking about going to 4 days ago, and the stock hit up to $847 and closed right near the lows at 420. It was over. The party was over at that point in time. There was no dip to be had. The next day, loses another 200 points. The next day, loses a little bit more. And the last 2 days, kind of consolidated a little bit. Now it just starts losing here again. Like, is it all going all the way back down to where it came from at $95? $100?
What's
possible?
What's
could it bounce anytime? Yeah, this thing's squeezy and could bounce at any time, but at least you know where you got major support there. So I think I stick with that. Is where the major support is. It's $100. So if it gets down there, yeah, it becomes interesting. Anything above there, I could lose 50 points here on here still. So I'm just going to stay away. I'm not saying it can't bounce here. I'm just saying it's not an easy trade from here.
And the chat is still kind of just wondering what's going on in the markets. I'll pull my spy chart back up here. We are still leaking. We got a little bit of a rebound there, but we are still leaking a little bit here.
At what point in time can the S&Ps just stay this resilient? USO is up another $5. So I don't know.
Yeah.
Like, money managers start getting to their desk and they're like, are you kidding me? We're at all-time highs, and we got, like, I filled up yesterday. I have a minivan. It was $110 to fill up my wife's minivan. And I'm like, this has got to hit, the economy eventually. This is something that goes right out of your pocket here. Like, that minivan was always like Canadian, like $75, $80 to fill it. 110, like, it's just all of a sudden, and with no hope of it going lower, USO's going higher. So the gas price is going to continue to go up here right now.
And
so, this is just eventually got to trickle into the economy here. It may not show up in first quarter earnings, but hell, it's going to start showing up either in the guidance or in the second quarter earnings. If oil stays elevated, these prices, the economy itself, I don't know if the stock market's going to sell off, because the stock market doesn't appear to sell off for anything. But the economy itself is going to go into a recession if oil stays at these elevated prices. And it doesn't look like it's coming back anytime soon.
Guys.
I am in shock that the S&P is really where it is. Like, part of me wants to just say sell it all. Like, we're just in stupid town right now and just sell it all. But we know what's driving it. It's AI, and we don't know where that's going. Efficiency. That's what the exciting part is. So that's why I'm trying to stay in the AI theme. But what I want to be in a lot of these stocks right now, like even General Motors, it's a great day yesterday. Okay, but you can look at all, other obviously, stocks as well. We talked about FedEx, sitting right up here, 52-week highs. I don't know. They have a bunch of trucks that deliver stuff. Like, the fuel costs have got to be an issue for some of these companies here eventually, doesn't it? Am I just like, is fuel does not matter anymore? Is it we're all going to have EVs and we don't care about gas prices anymore? I tell you, everybody else that I talk to is talking about it.
Really?
You don't hear people talking about the higher fuel prices? This is it's a conversation when you just go and talk to anybody, the fuel prices. Where was fuel? Where was gas prices, Brentster, in Michigan 6 months ago?
I am not the best person to talk about this because I literally just get my gas. For better or for worse, I just
don't care.
What are you going to do?
Let's put you in a different bucket.
Okay.
Let's put you in the bucket of the person that's living paycheck to paycheck. Let's put me in the bucket of the person that's living paycheck to paycheck, because I kind of do that because I'm just like cheap. So it pisses me right off when I go to the pump and I'm paying 50% more for gas here right now. But that just pisses me off. I'm still fine. I don't have to worry about paying my bills. What about the person that is literally, and a lot of the Trump supporters that are literally, living paycheck to paycheck? All of a sudden, you've got an extra $50, $100, $200 a month going to fuel? That hurts. That hurts. And that's going to curtail your spending. Not, it's going to curtail all of your spending, especially, discretionary spending too. So, it's just common sense that eventually this, unless oil just collapses, which we thought that's what was happening 3 weeks ago. but now we've escalated right back up and USO is making new 52-week highs. At what point in time does the market say, holy crap, this is actually going to start to hit the economy? I think that time is coming soon.
Will the Fed talk about it today with their rate decision, which is not going to be a decision. They're going to keep rates unchanged, but will the Fed have to talk about uncertainty related to oil price shock?
Maybe.
Because of the conflict in the Middle East. That's not the craziest thing I've ever said, I don't think.
No.
Also, that was a nice little preview. Fed rate decision at 2 p.m. today. And Jay Powell will be speaking at 2:30 p.m. Eastern time for his presser. Thanks,
Lots
Brent.
of things to worry about here, but the S&Ps are resilient. So one thing I will say is we can worry about all this stuff, but I'm still fully invested here because AI is changing the world. So I guess we just stick with I'm going to stick with the hardware and the energy names as I put new positions into my portfolio, and probably stay away from real economy stocks for the simple reason, even though some of them are doing well, I don't want to own FedEx right now. I don't think the market's pricing in this.
Fair
I
enough.
think they're and certain stocks. So if you have a company that's very dependent, like even your airlines, think about your airlines. They've had some pretty good comebacks from the lows, and they've started to leak here again, just like Delta. Remember I was saying with Delta, but it's held on pretty well. It's not too late to sell.
And I am not showing the chart here because I put the earnings calendar, the econ calendar on screen, Dennis, to kind of move us over to our earnings previews. Did we cover all of the earnings that you were hoping we would review?
I mean, there's like 200 companies reporting here, so if you have a specific company that you want to talk about, let us know. We could probably jump back into here, but I think it's important that we do go to our earnings preview here right now because we're going to run out of time. We also have our guest coming on here very shortly, although she's running a little bit late, she just said. So, I mean, Microsoft, Meta, Google, Amazon, all tonight. These earnings reports are going to dictate the next move in the S&P. So we can talk about oil all we want. It is just noise because the moves are going to come from what these four companies say tonight. Microsoft, obviously software. Meta's a little more software. Amazon, Google, they're doing their own thing. Google, you can argue. These aren't chips, we'll say that. So it's going to be very interesting to see what these companies have to say, especially Microsoft, because there's been so much pressure. There's been so much worrying. Does Microsoft have a low enough bar that if they say, hey, look, we have no problems at all here, we think Microsoft Office sales are still awesome, and they might still be awesome. Are they going to be awesome a year from now? That's what, I'm curious about the guidance here.
Yeah. And McFeehan has made us a nice little expected moves cheat sheet here. We're looking for I like the dollars. I like you guys, Joel and Dennis.
I do too, but I get the percentages because it normalizes everything. So when you don't have like the higher price stocks here, that it looks like, whoa, look at that expected move. So it normalizes it here. So it's probably better to talk in this context.
So Microsoft expected move about 6.5 or 7%. Meta expected move about 6 to 9%. Amazon about 7 or 8%, and Google under about 6%. 6% expected moves. These are major reports, so of course they are very important to the market. Still, these are pretty large expected moves. Am I wrong, Dennis?
No, they're pretty big. And I mean, it's just, the unknown here of this earnings season. And we've come out of a volatile period here. I mean, Amazon, give a perspective, ran from 210 to 260. High bar. One of the biggest positions in my long-term portfolio. I'm not going to sell it here. I've been in for a while. But I mean, there's a high bar. There's no doubt this stock has run. Meta has run up pretty well here too, from 530 to 670. Higher bar here. Microsoft's even come back. You could argue it's a higher bar, but it's a software name, so people aren't expecting that much. They say something good, it could be okay. Google's the one that's making new all-time highs. So the bar is high here as well. So there are some high bars happening here. Doesn't mean they can't get over it. Just means that, it's going to take, better, like numbers and just, a slight beat to probably keep these stocks going. Google's interesting because it's at the thick of it with Gemini. It's at the thick of, being part of the AI disruption here, done some disrupting itself. We know we only talk about Anthropic lately, but they still got Gemini. What are they cooking? Do they talk about stuff that they're cooking on the call? That might be one of the more interesting reports to listen to is the Google. Probably the Microsoft first, because we really want to know like how they're doing. Is there any type of hints of AI disruption happening here? Or is the market just, way too ahead of itself? So I'm probably more interested in the Microsoft call than any. But these moves here, we've had big moves in all these stocks. So the expected moves here I'm not surprised that they're higher.
Yeah. We do have Nancy in the background. I think she's just getting ready to go here. I'll pull up the
Sure.
calendar for one more quick sec, Triple D. And
Yes.
besides the big four or so, we also have Qualcomm, we also have Ford, we also have Carvana on our list, but there's like 200 other companies, like you said, Dennis, reporting.
So many.
Any other highlights besides your big four?
Qualcomm
Stop
will
at
be
you just
interesting
mentioned.
with the news I had the other day. What do they have to say? That's going to be tonight as well. Carvana is always interesting. There's always big moves there. The stock, has done really well here as well. Come back a long ways here, so that's always interesting too. eBay, all on my radar. And then tomorrow, Apple and SanDisk. Obviously SanDisk is going to be like what's happening. It's up 62 points today just because of STX. So stock making or getting very close to a new all-time high as well. Actually, just kissing up to its high from 2 days ago. Incredible moves here. If Nancy's ready, I'm ready.
All right, let's go get Nancy. Let's meet Nancy. Nancy Tangler, it's very nice to meet you. She is CEO and CIO at Laffer Tengler Investments. Thanks so much for joining us. And how you doing this morning, Nancy?
Brent, good to see you. Sorry I'm late, Dennis.
No problem.
You're all good.
We've
always got stuff to talk about, so it's no problem at all. We're glad you can make it here, Nancy. Let's talk about give us a little background on yourself if people aren't familiar with you, not familiar with Laffer Tengler Investments. Tell us a little bit about yourself and your firm.
Oh, all right, Dennis. Well, so I've been at this for we don't need to know precisely how long, but over 40 years. And I've known my business partner, Arthur Laffer, for, 30 of those 40 years. So we are not just partners, but we're very good friends. He covers the global macro. I cover domestic macro and then manage the large cap equity strategies. But I think it's important to note that I was brought up as a value manager in a period where value stocks were dramatically outperforming. And then we hit the 90s and we had a little stumble. And so we developed a secondary valuation metric that allowed us to buy fallen angel growth stocks. So our primary metric in our dividend growth strategies is relative dividend yield. So we buy companies whose yields are high relative to their own history and relative to the S&P. That gives us information because managements of these companies, these large cap companies, set dividend policy as a portion of long-term sustainable earnings power. And then relative price to sales ratio. We were trying to find a metric that was as reliable as the dividend, which is a fact. And so the one we came up with was sales. If you manipulate sales, gentlemen, you go to jail. So earnings, you can produce different types of earnings reports and drive a truck through the difference, but sales are a constant. So those are the two things we look at. And then we do the fundamental research, sit on all the earnings calls. And this is all manifested in our ETF TGLR.
TGLR, awesome. We have a comment on stage right now, Nancy. I remember Nancy from the early days of Squawk Box. She was a guest host many times. Is that true, Nancy?
Yes, it is true.
Wow.
My claim to fame was sitting next to Mark Haynes, and
my gosh,
he didn't talk to you, and so there was a point.
Stop! We got to hear.
He was just focused.
He did. I mean, and you're sitting right next to him. It's super awkward, and he's eating, during the break, and he had a big strawberry in his tooth, and I was like,
"You're like, you have a little."
Did he? Did he really wear jogging pants? Everybody says he just had the suit on top and jogging pants on the bottom.
Wow.
And shorts. Yep. He was a great man, but
he was.
I was young then. I was like 30, and so that's a blast from the past.
We lost a good one the day we lost Mark Haynes. He was one of the best out there. I'm glad you are corroborating what I had felt about Mark Haynes, Nancy.
Yeah, he was great.
So we were just talking, you might have heard before you joined, Nancy, we were just talking, getting ready for the earnings here tonight. We have Microsoft, we have Meta, we have Google, we have Amazon. How are you setting up here for big tech's big earnings week?
Yeah, so we own all of the above except for Meta. I'm still glowing after Starbucks earnings because that's a big turnaround for that company. And Brian Nickel, we were hopeful he was the guy, and it turns out he probably is. But in terms of the ones that you mentioned, our favorite in that group is Amazon, which had lagged for about a year. We just continued to buy it. We thought we think Andy Jassy is the man in terms of being able to take the company to the next level. And I believe he's demonstrating that. So we're going to be watching, obviously the same thing everybody else is, AWS growth. We're going to be watching growth in advertising because we saw Spotify stumble on the advertising side of the business. So we're going to be watching that. And then, just looking at backlog and Trainium. So we'll see, but I think we're still well positioned for the AI trade to continue to drive earnings growth.
Why no Microsoft?
We do own Microsoft. We actually have been buying Microsoft recently. We do think they're one of the winners. It's in our ETF TGLR. It's also in our growth strategies and our 12 best ideas. So we like the name. It's been a difficult stock to own for the last year, but I would never underestimate Nadella. They are pivoting on AI. They had a botched rollout, but guess who else did? Google. Remember Bard?
Sure.
Yeah.
Good point.
So we think they are one of the winners and beneficiaries. We have a couple of others that are a little harder to swallow that we've been adding to, but ServiceNow being one of them, and Palantir easier. So we do like the software names to not to a person, but specifically some names. We exited Salesforce and Adobe a while ago.
I mean, Salesforce and Adobe just can't even catch a bid here at all.
Right.
ServiceNow you can throw into that bucket as well here. Yep. What changes the narrative here for these stocks? I mean, Microsoft, I've said if you're going to own a software name, and I don't know if I want to own any, but if it was, it would be Microsoft because it is definitely best of breed. What changes the narrative? I mean, you've had Adobe did a $25 billion buyback announced last week. The earnings were fine. They're trying to obviously re-rate their stocks higher. Bill McDermott's going on the open market, buying his stock, from ServiceNow and saying, on CNBC Mad Money, the stock will re-rate higher, he says. I mean, they're so upset about their stock prices here, but yet the market continues to punish them. And then Benioff, we know with Salesforce.com has just been going crazy with his stock price falling and not believing it and, doing everything he can to get the stock price to go up too. They don't go up. What changes the narrative here?
Yeah, not a lot of Ohana at Salesforce.com these days. I guess I would say a couple things. I don't know that I think Adobe does get re-rated, and it probably stays at these levels for some time. You can make the argument that even Intel finally rose from the ashes, but at what cost to long-term shareholders? When I was getting questions about Elon Musk's pay package and the egregious nature of it, I kind of pointed to Narayan at Adobe, who had been paid $220 million over the last 5 years as the stock was down cumulatively 32% and in a raging bull market. So I think they have a lot of work to do. I don't know if they recover. Salesforce is starting to pivot away from the seat model. One of my clients is selling them software that can measure volume of usage. And I think that's where you're going to see them move. So more to a platformization kind of an offering. And then ServiceNow, I mean, they should be the winner. They are vertically integrated. They are the control tower of AI data on the cloud. They have an analyst meeting on Monday in Las Vegas, and we're hoping to hear some compelling guidance as well as defense of their moat. So stay tuned.
Continuing, let's talk the Fed. We're going to get an interest rate decision here today. I mean, obviously, Warsh is coming in here, or it looks like he's coming in here. What are your thoughts here for the Fed's course of action? Obviously, there's going to be no change today, but is there like that worries about where oil prices have gone? Is there worried about inflation? Is there worried about AI? I mean, where do you think the Fed is heading?
Yeah, so it's pretty funny to me, Dennis. We were super critical, by the way, of Powell all the way through, and I think we were right. The fate, which was the anticipating inflation model that he embraced in 2020, was just a profound failure. He threw away the models at the Fed, but kept the 450 economists who were still producing the model. The dot plot is dumb. So I like a lot of what Kevin Warsh has to say, but I find it ironic that you're hearing a number of talking heads say, well, he's only one guy on the Fed and he's only one vote, but we never heard that when Powell was in charge. So I think the market will test him for sure. And that's the risk to the market near term, I think. But I love the things he's talking about. Less talking, not using the balance sheet, using interest rates. That will benefit average Americans if we move away from this sort of moral hazard of just expanding the balance sheet every time something happens. So I don't think we get a cut today, but I think we get 1 or 2 more this year. But the market has to agree with that because we've had a number of cuts and the 10 years range bound. So
sure. Yeah. So I saw a note, Nancy, that you did, and I saw something where you were trimming some of your energy holdings and you were putting some money into Microsoft, which we already talked about. But the other space group that you were putting some money into, I was very intrigued by, and I want to hear your thoughts. You were taking some money out of energy and putting some money into housing. Is that correct? Will you tell us about this thesis?
Yeah, so every year I have a list of stocks. This year it was the 6 for 26. Last year's was up about 28%, and ServiceNow was in it, by the way. So it speaks to, not every stock works all the time, but you just want to be mostly right in our business. But in that group was DR Horton, because I really do believe that housing is on the edge of turning around and reaccelerating. And so we put it in. We added it last fall. It immediately went up, and then we got to pull back on all the interest rate worries. But they just reported earnings. They had an excellent report. Of course, they're buying down mortgage rates, but they're selling houses, and they're in the sweet spot of prices and geography. So Southwest, East, the Southeast, and the Southwest. Gosh, geography, and not a lot of exposure in the East, and also just the premier first-time buyer. So we also own, as part of that bet, Sherwin-Williams, which reported yesterday or the day before and had a great earnings report. So we think housing's going to recover. We own Home Depot as well, and we wanted to be more exposed. A lot of times when we get into a name, you could argue that we're a little bit early, but I'd rather be a little bit early than a lot late. So
jump into one more here, which you were calling a must-own stock, and I've got to hear this one because I do own it, but I've lightened it up over the course of the last year and a half. I'm scared of Elon Musk, but you're saying Tesla's a must-own. Talk to us about Tesla and why.
I know, super controversial.
For sure.
A couple things. I owned Tesla many years ago on a recommendation from Ron Barron. No surprise.
Of course, yeah.
There were no earnings. I mean, I've known him for decades. There were no earnings, and I was concerned. I became more and more concerned about Elon's behavior, which was super erratic. He got in trouble with the SEC. He was smoking pot on Joe Rogan. C-suite was crumbling, sleeping on the floor. So I had a double and a half. So I took it. And it proceeded to go up fourfold. And so I learned a lesson about underestimating the CEO's vision and strategy. If you look at where the company is today, it's no longer an EV company. And we proved that with recent earnings, right? They beat on EV sales and earnings, and the market went meh, because people are focused on full self-driving. And Optimus. We got back into the stock when Elon was selling all his shares to buy Twitter, so about $104 a share. And every time it gets in the mid fours or the low fours, we trim it back pretty materially. We bought more last year during DeepSeek at 240. This is the premier AI space robotics bet. We run a thematic portfolio that is focused on those themes plus nuclear and a couple of other things. And so we're really long the name across our growth strategies and it was in our 6 for 26 and our thematic portfolio. I think you've got to own it. He will deliver. He'll just give us all heartburn in the interim.
No, I get the heartburn. That's what I can't take is the heartburn on this thing. That's why I have a love-hate with it. Every time I sell it, I want to be in it, and every time I don't own it, then I want to own it. So I don't know. I can't get over the love-hate with it, but this is great though.
Thanks so much for joining us, Nancy. It was wonderful getting to meet you and hearing a little bit about you and getting some of your awesome thoughts. CEO and CIO at Laffer Tengler Investments. Her fund is running the TGLR ETF. Check that out, up almost 40% over the last year. Thanks again, Nancy. It was very nice to meet you.
You too, guys. Thanks so much.
All right,
awesome.
later.
Thank you.
Oh, that was a good way to end our Pre-Market Prep here on this Wednesday. Triple D, you want to go over to the STN room?
Yeah, we're going to head over there in the STN think tank here in a second. Just, quickly looking at themes here for the day. I think the theme is just mixed markets. You obviously have oil, which is going to put pressure on certain names here. Expect your airlines to be very weak, your cruise lines to be very weak with elevated oil prices here this morning. Also, I just think, the S&Ps are being held back here too. Qs are a little more resilient. We have a huge run in the chips here with Seagate and obviously NXPI trading up substantially here this morning, although they're leaking here a little bit. But this market has just been running on chips for a while and running on hardware for a while. And I mean, oil doesn't impact that. So that's, the good news. The bad news is it does impact a lot of other things, and we're seeing a lot of other stocks. The big thing, though, today doesn't even matter, the trading. It's going to be a lot of noise ahead of the big four reports tonight: Microsoft, Meta, Google, and Amazon, and then Apple tomorrow. So the next course of action for Apple is going to be dictated not by oil prices, but by what are the big four saying here tonight. So stay tuned here, folks. We'll be analyzing it obviously live in the STN Think Tank. We run that show from 3:30 to 5, so we're breaking down what we think about those earnings live. If you can, come on over, give us a free trial, and join us.
Thank you, Triple D. We do have Mark Chaikin coming up at 10 a.m. in the STN Think Tank, ladies and gentlemen. And then a reminder, it's Wednesday. So Wednesday means Options Unchained with CC Legator. Y'all can tune in here on the Pre-Market Prep YouTube. It is 1:30. Usually CC and I go almost like an hour or so. So about 1:30 to 2:30. Tomorrow morning in Pre-Market Prep, we are going to have Joel back. And we're also going to have Cameron Dawson joining us. So please tune in tomorrow to welcome Joel back. We missed him. And also say hi to Cameron and check in on how she's been doing. That's going to wrap it here, folks. Good luck out there. We'll see you tomorrow.